Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is doing well. It continues to be a very interesting August. Continues to be a very interesting August. This is notoriously a choppy but slightly bullish historically time. I know it may not feel that way when we're looking at the broader averages, but remember, everything is not the S&P, the Nasdaq, the Russell, and the Dow. It's a great big marketplace out there. We have sectors that are outperforming. We have commodities that are outperforming. So there are many setups that are happening in windows that we wouldn't necessarily think to open, right? Usually the idea is, what's going on in the S&P, but it's the Dow that's the relative outperformer. What's going on with tech? But it's actually the energies that are the outperformer. If you get the relative outperformance part of your trading right, the trade this, not that we talk about from time to time. If you spend most of your time on the watch list building, doesn't matter if you're day trading, doesn't matter if you're swing trading, you're going to find better follow through. And follow through, my friends, is how we get paid. So focus on the follow through. That's what we've been doing. Let's talk about what's going on. If you haven't already found that sometimes not just the opportunity, but the risk management is going to come from the shorter term timeframes, from being potentially a day trader. Entertain that notion. Day trading is not about hyperactivity. It's not about getting in, getting out, getting in. It's not that at all. It can be quite boring. World's most boring day trader right here. If you can think about day trading more about, believe it or not, risk management and an exit strategy. If I don't trust that an uptrend that might have happened on one day is going to follow through the next, you know who's going to benefit from that? A day trader. If we think the S&P is going to be up one day, down the next, the best way to do that is shorten the time frame and take advantage of the movement of each day. Now, it might be really scary to short new lows. We see the S&P moving lower and we think, do I really want to short into a new low, or do I just want to day trade the movement? So those are things that are going to be moving the needle. And I think for a lot of traders thinking, Rog, I don't know how to deal with an environment like this. The first thing I'm going to say is shorten the time frame. All right. The second thing I'm going to say is look for short-term swing trades. All right. So for example, on Wednesday, we took 4 trades in the mastery, the Sector Secrets mastery. We got long Johnson & Johnson for about the third time this month. By the way, 3 for 3 on Johnson & Johnson. We got into XHB, XLE, and XOP, all 4 long positions. Thinking, Rog, in this environment, you found a buy? Yeah, those are relative outperformers. So we build a position Wednesday. Thursday morning, the bell rings. Within about 20 minutes, we're already taking profits on XLE, XOP, and Johnson & Johnson. Yes, I took a paper cut in XHB, but I'll go 3 for 4 any day, right? If you're a ball player and you're 3 for 4 at bats, you're going to Cooperstown, and that's the way I look at that. So there are opportunities if you shorten the time frame. All right, that being said, where is my espresso? I don't have my espresso handy. All right. So we are Raghee without caffeine this morning. I will fix that before we start day trading in the mastery here in about 15 minutes. All right, so let's get to it. As always, if you have any questions, my Simpler Essentials room, my folks on the Twitter, YouTubes, if you have a question, go ahead and type it in. And let's start off with Robert, who asks, options expiration dates seem to me to trend bearish. Do I look for the downside trades on these days? So Robert, great question. So one of the things that I get a lot of questions about is, okay, Rog, we get that you're a boring day trader and everything, but how do you figure out the overall direction of what's going on in the broader averages? Really simple. All right. Let's pull up the 5-minute chart of the S&P here. Okay. Now, I'm going to go back to about 7 a.m. That's the first cup of coffee being poured in New York, if you will. That's when we start to see volatility and volume start to increase. That means more attention, more eyes, right? Little things make day trading, little nuances in day trading make huge differences in the bottom line. That's one of them. When do you start looking at the market? I've got a downtrend here, Robert. So I'm not going to presume a tendency, although that might be relevant. What I am going to do is say, all right, what do I have today? And that's what my tools are geared to make really obvious. Grab candles, multi-trend. So to your point, we are going to look at potentially the movement to the downside today. But I'll tell you, Robert, and some of you might have seen this in recent price action, it is nothing to see a mid-morning short squeeze. And part of the reason for that is, on one hand, collectively, we hate the fact that the Federal Reserve is still keeping the macroeconomic picture by way of the rate hike picture really murky. Murky macroeconomics make for very hesitant markets, which is why I keep saying shorten the time frame, focus on the day trades. But what do we go? 4 for 5 yesterday, 3 for 4 on the day trades yesterday. I'm trying to remember what we did. The day trading's working, right? Because the Federal Reserve is injecting all this volatility. At the same time, it's injecting all this uncertainty. That is the perfect storm for great day trading. So what I would say is, am I going to look for swings into next week? Robert, what I'm going to say is, let's get through today. Let's get through OpX. And then in the meantime, let's shorten the time frame and day trade. So I won't say I'll necessarily buy into dips in trends today, although we might, like we did on the FOMC minutes Wednesday. We're still averaging 2 to 4 day trades per morning. So I'm gonna keep pressing our advantage there for lower risk and activity, and that nice consistency of building that account. No one hit wonders here, right? I love Whoop, there it is, but I want to be consistent, right? I want to be the Stones. I want to be the Beatles, right? So ultimately, what I want to do is look for setups on the daily, but let's continue to day trade. I hope that makes sense, Robert. Great question. All right, next up, what are my thoughts? Hey there, Richard. What are my thoughts on NVIDIA before earnings? So it depends on how far before earnings we are, because I don't want to trade earnings right on top of the event. Let's go take a look at what we've got on NVDA. All right, so when I look at NVDA, earnings are right here on 8/23. Today's 8/18. So I'm inside the 14-day window. What does that mean? If I've got less than 14 days, Richard, implied volatility has gone up, uncertainty has gone up, the cost per trade has gone up. I'm not a writer of options. I prefer to be long calls, long puts. It is easier for new traders to say, oh, I can buy a call and I can buy a put. And experienced traders, you can do that lightning fast. So regardless of whether you're a new trader or an experienced trader, long calls, long puts is fast, it's effective, and it's easy to learn and easy to do. It's easy to execute. I mean, you could execute that stuff on one of these, which I do quite often. So that being said, I also have to acknowledge when I'm not in, when I don't have an edge, and I'm not going to have a terrific edge into the immediate earnings. But let me show you something. And we have this in the on the Countdown Trader, and we're going to cover this more in the Sector Secrets Mastery. So I'm going to go back 4 weeks, which is going to put me right about here. All right. That's 4 weeks. So in the 4-week window, I'm going to look for opportunities. And also I'm going to look in the 6-week window. So that takes me back to about here. 6 to 4 weeks before earnings, Richard, is when I want to think about earnings. Inside 2 weeks, when I start getting inside 2 weeks, which is about here, I'm really no longer interested. And look how swiftly the mean reversions to the wave, and even the reversions to the daily price movement range, of which we probably had about a half dozen that followed through. Notice how much more volatile and uncertain it is getting. That's something we definitely want to keep in mind. If I'm looking at the way in which we're getting very choppy here, I'm outside of my edge. But look at how great the edge was if we're a little bit more preemptive about earnings, right? Y'all see that? 4 to 6 weeks out, so much better than 2 weeks out, and certainly 5 days out. So the timing is what I'm trying to get through here. And look, gang, I think we all know this. Timing is trading, right? Too early, you might miss the opportunity. Too late, you're probably on the wrong side of the opportunity. So timing is trading, and that's just an element of that. So I hope that makes sense. Stanley asks, what are my thoughts on Walmart post earnings? All right, I like that a lot. So what are my thoughts on Walmart's Walmart after earnings. So we've got this move here in Walmart. That's a pretty sharp move lower. We're going to open up in the vicinity of a 155. Yeah, is that where we're going to open up? Yeah. So here's the thing. Once again, what a great reminder. Look at going back that same 6 weeks, 4 weeks, 2 weeks, right? Look at that window there. And all of a sudden, what do we have? We have this move lower that's way outside the typical support levels that we would trust a month ago, a month and a half ago, right? So those are all things that we have to deal with. Ultimately, what we want to remember is that with a move this large, give it until Monday. So my thoughts are, I'm still bullish, but I need to wait till Monday to really get some kind of setup. So that's where I would focus on, Stanley. That's where I would focus on that. Again, timing. So this is too soon. Let's see how this Friday, OPEX Friday, post earnings works. But I think the bigger takeaway is look at the beautiful predictability 6 weeks out, 4 weeks out, that nice consistent movement higher. Isn't that where we want to focus on pre-earnings, right? And I hope that really is clear there where you say, oh, right, I really don't want to be on top of earnings. I want to be in those further out windows as we see rallies into earnings, and then let whatever bonkers action happen. I'm not going to play a lottery scratch off, sort of flip the coin trade on whether or not the binary move is up or down. I know it sounds really great when it works, but it's really awful when it doesn't. So I'm going to leave these things alone. And I love that you asked about post earnings. Yeah, beautiful, beautiful. I love it. So rally into, or the run up or the moves into earnings, flat, and then post. So Monday, Monday would be a great time to look at that. And while we're taking a look at Walmart, let's remember this about Walmart. There are some cool things about WMT. Let me show you what we have here. So if I open up the XLP, right? So this is where the sectors come into play. If I open up the XLP, what are some of my relative outperformers, right? They used to be things like Procter and Gamble. They used to be things like Coke, Costco, Archer Daniel Midland, and Walmart. You'll notice how they're all going neutral. So the most bullish symbols in XLP are the ones that are double yellow. Neutral momentum, neutral trend. Procter & Gamble, Costco, Archer Daniel Midland, Walmart, right? Those are the most neutral. So keep those things in mind. That's what we've got going on right now. All right. So I would say be patient with things like Walmart and even staples in general, and then we'll go forward from there. All right. Fantastic. So let's keep going on. Let's see. That's what makes a market. I'm an option seller, so my earnings trades are 2 hours. Yes, everyone's got a different approach. I think that some of those things can be kind of advanced. They can be kind of tricky. They can be kind of risky. Not that they are not doable, but I think at the end of the day, for me, what I want to ask myself, and I'm looking for my drawing tools here. There they are. What I'm going to ask myself is, what's the easiest, simplest kind of trade for most traders to put on, whether they're at their desk or on their phones? And so that's where, for me, I map to where it's going to be the consistency, right? And everyone has a different approach. I think some folks just want to hit triples and home runs and grand slams, which is great. But on the flip side of that, you'll also notice in baseball, your biggest grand slam and home run hitters also have your greatest strikeouts. So as long as you're okay with a high degree of strikeouts and a high degree of home runs, which is fine as long as you can stay ahead, that's a great career too. For me, I want to be healthy for every game. I want to show up for every game. I want to get on base for every game. So I want that consistency. I want to be the Iron Man. I want to be Cal Ripken when it comes to trading. And for me, that consistency helps with, well, gray hairs and wrinkles for sure. And it just helps make for a very peaceful life and a nice, smooth P&L, right? So no agita, no heart palpitations, world's most boring trader. That's what boring is to me. Consistency. Look, consistency is kind of boring, isn't it? We love things that go viral. We love things that are just big hits and big smashes. For me, I want the boring consistency. But however we find the consistency, FinWest, to your point, however we find the consistency, everyone's going to have a different perspective. All right. In what circumstances do I set my stops to 25% of premium paid? And when do you set them to the point of validity for the trade itself? I would say point of validity is mostly for futures or even shares. Most of the time when I'm playing options, dark rival, I'm going to pick a particular percentage. So in the sector secrets mastery room, whether that be for day trading or whether that be for swing trading, we have a spreadsheet. And that spreadsheet's where we punch in our account value and then all the relevant data that you need to budget your trades, to know how much to spend and how much to risk is spit out. So that's what I still go through. I like it to be very formulaic. I don't want it to be subjective. Points of validity are very important when it comes to trends, and I'll acknowledge those, but those are typically going to be probably more relevant to highly leveraged products like futures, which I actually don't think most traders should start off with. And yes, I've been trading futures for over 30 years. However, I will say this: futures are not ideal for new traders. It's fast, it's volatile, it's highly leveraged, and let's face it, to take futures overnight now, it's cost prohibitive for most traders, right? Think about $18,000 initial margin requirement for the one NASDAQ mini alone. So for me, I'm going to stick with options, and with options, I can keep it nice and formulaic, and that's what I typically do. So anybody can grab the spreadsheet in terms of, once you're in that mastery, once you're day trading with me or swing trading with me, you type in your account, value, you choose the amount of risk, and then everything just auto populates in that spreadsheet. You say, oh, okay, this is my budget. This is what I'm allowed to risk. And then we just follow the setups that I send out from there. So it makes it, I think, pretty simple. Point of validity is great, but I think point of validity really now is going to sync up with the validity of a trend, right? And then even that, we've removed a lot of this subjectivity, right? You might say, Rog, how do I know the difference? You don't really need to even do that anymore, because we're going to use the multi-trend to tell us what the structure is, because structure dictates, and I know a lot of you know this, structure dictates strategy, right? So we'll use the multi-trend to determine the structure, and then we'll go get the strategy. So even things like points of validity, that's what I call, by the way, really my final stop loss. It's a way to not rationalize holding a loser longer, because when you say this a stop loss, it's easy to negotiate. When you say the trade is no longer valid after this point, I think it's a lot more black and white. So I think those are things that you can do to make life less subjective, more objective, and therefore also more repeatable. All right, so just a quick reminder again, at the end of this month, we're going to have a special discussion about day trading, because this is going to be the way that, again, I'm getting about 2 to 4 trades every morning by about 10:35. So we've got plenty of activity. We can control our risk. We can go with smaller size and less expensive options. So it's both affordable and yet scalable. So I have traders that are trading with $5,000, and I have traders like myself that are trading with about, 10 to 20x that. So it's scalable for different account sizes, friendly to small, friendly to Godzilla sized accounts, but we're getting the activity, and we're getting, more importantly, the risk control, right? The risk control. In an environment like this, shortening the time frame. Look, when you shorten the time frame, you don't care if the market makes a higher high or a lower low on the daily or not. You just want that volatility to give you an opportunity in the morning. And that's a great way to be. You can be completely neutral, right? When everyone's panicking, you say, you know what? I don't care what's happening, because I'm going to be flat by the end of the day. Heck, I might have paid myself and be flat by lunchtime, and I get to do it all over again tomorrow. And that's working really well right now. So anyways, pencil in, I think it's the 30th. We're going to talk about that. And in the meanwhile, gang, control that risk. It is OpX. There's no reason to push on a day like today. It is a Friday. Sometimes Friday hates traders. I'll see you all in the Sector Secrets Mastery in just a few moments. Be good to each other, gang. I'll see you on Sunday for the Top Tier Outlook Live right here at the Simpler Trading and my YouTube channel. Be good to each other, gang. I'll talk with you soon.